Hey traders, it is January 10th, 2020. Happy New Year. And this is the analysis for the coming week. Non-farm payrolls numbers came out. It was strong, and the euro dollar reacted to the numbers. So we're looking to extend. We're looking for the euro dollar to continue to rally all the way up to 220, 112, I'm sorry. If it does break 112 and stay above 112, then we're looking for targets of 114 in the coming weeks. So keep that in mind. I'll be sending out a trade signal once that happens. But right now, we are long on euro dollar and just buy and dip. So if it comes back down, then just enter a trade, take that up, and that is the euro dollar. Pound dollar, the same thing. Has found support. We have a AB pattern on this 2-hour chart, and we're looking to extend that all the way up to 131 area. USD Swiss was the other trade taken, and bearish engulfing candle on a 2-hour chart, a trend line break. So this most likely will continue to sell off down to these levels down here of 96.62. So stay short on USD Swiss if you did manage to take that trade. The other one was, is New Zealand dollar. We have a trend line break on a 2-hour chart. Market, this set the tone for the New Zealand dollar non-farm payroll number. So it should continue to rally on at least all the way up to 66.70. I'm looking at a target, long-term target of 67.53 to 7,000. Hopefully that will happen once it gets up to these levels, or start looking to short. Okay, Aussie dollar, the other one as well. Trend line break on a 2-hour chart and a 4-hour chart. Now, again, non-farm payroll has set the tone. Notice that it broke the, I'm sorry, it didn't break. Let me just clear this and draw that trend line again. Notice that it hit the backside of the trend line, so we are long. Market rallied, broke the trend line. We're in a buy zone, and we had this crown, king's crown, on a daily chart as well. So this should continue to rally all the way up to, hopefully up to the 74 level. And once it gets all the way up there, we're going to start looking for selling opportunities. Remember, this pair had been in a downtrend for such a long time, since last year, and it finally recovered. Nice retracement, buying opportunity. Look to target 71, 72. If it gets to up to 74, we're going to start looking for selling opportunities. Okay, and I think that's it. USD Swiss, we're going to be targeting that 96.20 level, and I think that's it. I think those are the only pairs. I hesitate to analyze the pound crosses simply because of Brexit, but I was hoping and looking forward to a deeper retracement on pound yen. There's the AB pattern, and we do have negative divergence, but with net divergence, especially on higher time frames, they're lagging indicators, and it can take weeks before the market actually responds to divergence. Like here, look at this divergence, and it took so long. Let me just show you here what happened. There was a clear positive divergence back in July, and it took 2 months. Market retraced to a fib level and then took off north. So don't expect the same thing to happen. This may just go back up to test the highs, and then from there, hopefully it'll turn around and head south. This one took we had a trend line break. Market sold off before it broke a trend line, retraced again, and continued to rally for about 3 months. So we should see the same thing here. We have clear divergence on a daily chart. We're waiting for a trend line break as well. So here is our trend line, and hopefully this trend line will be broken. Once that trend line is broken, then we're going to be looking for something like this, and then the market retracing, possibly testing the backside of the trend line, and then selling it hopefully down to these levels down here, to the previous resistance turn support. Okay, so that's it for the analysis, non-farm payroll numbers. Remember, the trade room is open. If you haven't joined, please do so. Go to the website and join our trade room. We are open Tuesday, Wednesdays, and Fridays. Have a good weekend and talk to you guys soon.